Let's continue my thread about foreign exchange markets, and now look at British pound against dollar from long-term perspective purely as a trader. Now here is one of the context. British pound follows closely to Swiss franc and euro before Deutschmark, because while European economies are integrated within each other and they are main trading partners, thus they're in large part their economies and monetary policies are kind of similar. So here many things would overlap with euro as well, so I won't actually give you that much uniqueness if you watch my previous video, but still I want to stress out some very important differences between pound against euro, so I hope that they will help you in your trading journey. Excuse me about this idiotic ad, they're really annoying, I know, but still. With that said, let's start. I think euro wasn't that fortunate with us and didn't allow us to look at the market since 70s, but now we have that luxury. And in fact, currency market as we know now started in the 70s when gold standard was abandoned and currencies were trading, as we could call, in free floated way. So central banks from that time didn't actually know much what to do, and international trade wasn't that integrated and financial markets were not that integrated, so the price spikes and movements in currencies were much sharper now there than it is today. Well, one might think that there are less profit opportunities now. Actually opposite is true, because at that times it was impossible to trade in the manner what we have now. So with that context, let's see what we have now, and start with great inflationary bubbles of 1970s. And here we could see that, interestingly, despite the inflationary pressures, actually dollar was not that bad. Yes, and we could see that they had huge swings, I think one from 2.5 to 1.6 pounds per dollar, and it was rather spectacular. Of course it was in the long time period, but still we got that move and we got counter move here again to almost the same levels. So yes, of course there were moments when markets were flat, but nevertheless they continued prolonged rather smooth trends and they made it all back again. This was the high inflation years of United States, and I think this was somewhere where we had Plaza meeting, famous Plaza meeting, which changed currency markets to weaken dollar or something like that. I don't remember where that was, but I still, excuse me for this sound, but I still know that it was one of the great stories of 80s. Unfortunately, I was too young. I was not born there yet, so I was not able to witness that. But still, let's see. From mid-80s, actually, from long perspective, it might look that pound didn't do anything good, but it's not true, because it still made rather good swings from 1.42 to around $2 per pound. So for realistic traders, these were not the worst moves ever. It was rather consistent movement of trends, especially if you know how to use leverage. But then, yes, pound was rather straight in its line, and this was, yes, I didn't forget to tell you, but here's the interesting thing. This was the time in 90, I have to do a precise time, but in the early 90s, whether it was this trend or this trade, I know looks very unprofessional, but I'm training my memory here. I didn't look any background here, but I didn't recall which trend that was, either this trend or this trade when George Soros broke Bank of England. I think this was in 92 and made one of the best plays in currency markets of all times. Yes, and this was here, and you could witness one move what was effectively created by one trader. George Soros bet against Pound of England, shorted Pound, made killing, and I think Pound was forced to remove him from pegged to other currencies. That was the story. I wouldn't bother you for details. I will do some explaining for fundamentals of currencies later, but as a trader you could see that there was a time when other trader could influence markets in that scale. This is impossible now. No trader is nowhere near that large to have any impact on long-term currency markets. That was also in the completely different time. And yes, then relatively stable markets for traders prevailed, and there was nothing much to do here. I think it was a whole decade when the markets were that flat. But if we go more realistically into larger scales, as you see here, the situation is not that bad. This was those dreary years of 1990s where just little trades prevailed, but then United States started to cut down their interest rates, dollar fell across the board, made a huge trend for pound, and then when crisis of 2008 happened, also spectacular trades for pound were presented. And other than that, everything else moved in the same fashion. When dollar made its, not dollar but Federal Reserve Bank with United States dollar made its quantitative easing, dollar fell those times back again, but pound wasn't doing that much either, so the markets actually were breaking even. And for historical perspective, up until 2014 there were not that good trends, but then since 2014, when dollar went much stronger, good trends prevailed, and then they moved in so forth back and forth fashion for pound, producing steady trends right up until here when COVID started and made another spectacular trend for dollar against pound. This is messy long-term view. What I want to say with this view is that opportunities exists and possibilities to make money historically exists in various markets, such as pound against dollar. You just have to see them, because these were very long trend lines, and it might not look like much, but believe me, even in those small moves there are plenty of opportunities for traders. So I will skip daily charts and go straight for hourly charts, for our charts, to illustrate my point. So here we are into 2019, and just see how many good trades are here. We have 1 trade, 2 trades, that's 2019, 3 good trends. Then we have good move, but unfortunately very difficult for us to capitalize on heights of COVID. Couple of flat markets here, then good rise in second half of 2020, and then in late 2020 still an additional 2 good moves. So we see here is trends continue in 21, 1 trends, 2 trends, 1 up and 1 short term, then couple of flat markets, and then late 2021 1 good trend, and in 2022 1 trend, 2 trends, 3 trends, and 4 trends. And this was the move when British government mismanaged their finances and pound collapsed to record levels, and then it fell back again. So for traders this was pure profit opportunities, and if we would be able to look at 80s, 90s and 2000s, you would see that these kinds of trends, which is steady money for traders if you know what to do correctly, happened all the time, because these moves historically were not that large, right? But in context of trading there are good ones. That's what I want to show you. These moves meant nothing if we looked at historical charts. You see they looked flat, so imagine how the magnitude of these moves in early 2000s, late 2000s, 80s and 90s meant. they were huge, and that means there are huge opportunities for traders because they have smooth trends, and that's what you want to know.